Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's episode, I'm being joined by my colleague and WTR Senior Energy Transition and Sustainable Investing Analyst, Peter Gastreich. Peter will share some insights from his initiation of coverage report on Darling Ingredients, NYSE ticker symbol DAR. Good morning, Peter, and thank you for joining us today.
Good morning, Tim. It's great to be here.
Peter, to kick things off, would you walk us through Darling Ingredients' history and how it has evolved into the company it is today?
Absolutely. Darling actually has roots dating back to the 19th century in Chicago, where it was founded by the Swift meatpacking interests in the Darling family. Back then the focus was on handling inedible byproducts from the growing meatpacking industry, mainly turning what would have been waste into agricultural fertilizers. Today, the company operates over 260 facilities in more than 15 countries across 5 continents, and they process around 15% of the world's animal agricultural byproducts. Recent acquisitions like Valley Proteins in 2022 and Gelnex in 2023 have only strengthened its global reach and product offerings.
That's an impressive global footprint I was not aware of, so very cool. What are the main business segments at Darling and how do they each contribute to the company's operations?
Well, Darling's business is structured around 3 core segments, and those are feed, fuel, and food. So the feed segment is all about collecting and processing byproducts like animal fats, used cooking oil, and bakery residuals. These get turned into proteins, fats, and minerals for livestock, aquaculture, and pet food. DAR also has organic fertilizers and even insect protein. The food segment focuses on health-related ingredients, primarily gelatin and collagen peptides, which are used in everything from dietary supplements to pharmaceuticals. Brands like Rousselot and Gelnex are leaders in this area. And then there's the fuel segment, which is expected to drive the bulk of future growth for this company. This includes the Diamond Green Diesel joint venture, which is with Valero Energy, and that processes waste fats and oils into renewable diesel and sustainable aviation fuel.
Great. So what are the top strategic priorities for the management team at this moment?
Right now, one of their biggest pushes is in expanding production of sustainable aviation fuel, or SAF, through the Diamond Green Diesel facilities. On the food side, they're investing heavily in the collagen and gelatin space, especially after forming the Nextida joint venture. Operational efficiency is another key area, leveraging technology like IoT to optimize collection routes and keep the cost down. In terms of financial discipline, Darling has concrete goals to reduce debt and maintain strong liquidity. And of course, they're keeping a close eye on regulatory developments, very important, making sure they're positioned to benefit from policy incentives related to renewable fuels. All this really ties back to their broader goal of embedding sustainability into every aspect of the business, from workplace safety to obviously emissions reduction.
Very well. And then what would you say, Peter, are Darling's most significant competitive advantages?
Well, Darling's biggest edge comes from its vertically integrated and global operating model. First, they have what you could call a, quote unquote, sustainable oil field, meaning they're the largest collector of used cooking oil in North America and a top processor of animal fats on a worldwide basis. This gives them a reliable, cost advantage supply chain for renewable fuels, which is tough for competitors to match. Second, their commitment to circular economy principles, transforming waste into high value products, resonates with both customers and also investors, and it positions them as a sustainability leader. Third, their global footprint with facilities on 5 continents, as I mentioned, gives them flexibility and the ability to shift raw materials and finished goods to the most profitable markets. In specialty food ingredients, they're the world's top supplier of gelatin and collagen peptides, which is a stable, high growth, and high margin business. And finally, their deep expertise in processing and pre-treating fats and oils is a significant technical moat, especially as the renewable fuels market grows more complex.
So you touched on their existing business. I'm curious, what kind of emerging opportunities is Darling Ingredients focusing on for future growth?
Well, first off, SAF is a huge opportunity in an industry that we focused on tirelessly here, as you know, at Water Tower. Regulations and tax credits are driving demand up, and Darling's positioned to be a major supplier through its DGD joint venture. Second, as governments ramp up on those decarbonization policies, Darling's low carbon feedstocks and products are only going to become more valuable over time. Next, the boom in health and wellness is really fueling demand for advanced collagen peptides and nutraceuticals, which Darling is targeting through investments, as mentioned in the next venture. In the feed segment, they're exploring insect-based proteins as a sustainable alternative, tapping into a growing market for a novel animal feed ingredient. Finally, renewable natural gas produced from organic residuals offers another avenue for diversification for the company.
Excellent. So, what are some of the main challenges or risks facing the company right now?
Well, regulatory uncertainty is important to keep track of, especially in the renewable fuel space, where profitability, as we've seen the last couple of years, you can have big swings based on policy decisions and the value of regulatory credits. Intense competition for low carbon feedstocks like used cooking oil and animal fats is another challenge as more players enter the market and drive up costs. Although, as mentioned, this is also a distinct competitive advantage for the company. Global supply chain disruptions, tariffs, and trade restrictions, these things can all impact operations and profitability, especially given this company has a big international presence. That said, the international presence can also work for them, work to their advantage in some of these things as well in terms of diversifying those risks. Operational safety, of course, is always a priority. This company has 260 plants worldwide. Finally, fluctuations in commodity prices, whether that's protein meals or fats, these can impact margins, particularly in the feed segment.
Okay, and it's wrapping up, Peter. Can you maybe speak to for a moment the company's financial performance in the recent past and what the outlook is for the company over the next 1 to 2 years?
Well, they have struggled a bit the last couple of years following weak margins and licking their wounds after a couple of, well, good acquisitions, but that were, made at a time when operations were starting to deteriorate. And so this led to deteriorating cash flow and a deteriorating balance sheet, but the outlook is really improving from here. Feed and food looks stable and likely to grow with new product offerings. But the fuel segment is going to be the major driver of the earnings recovery. On that, renewable diesel margins have steadied now that biofuel imports in the US are dropping, and local producers have adjusted their output. Feedstock costs have also softened, which is helping margins. And it's also worth noting that fossil diesel inventories are running 7 to 8% below the 5-year average. So the overall diesel market is tight. On the regulatory side, we expect the EPA blending requirements for biomass-based diesel will turn out positive and hopefully announced by the end of this year. So once the backlog of RINs from last year gets worked through and the new renewable volume obligations or RVOs are locked in, margins for renewable diesel should improve in 2026 and 27. Finally, looking over in Europe, the new Refuel EU regulation will boost demand for both renewable diesel and sustainable aviation fuel. So this should all kind of feed back into an improved outlook for Darling, which is going to be driven by its Diamond Green Diesel JV in the next 2 years, Tim.
Okay, those are really cool insights, Peter. I appreciate you sharing with us from your initiation of coverage report on Darling Ingredients, NYSE, ticker symbol DAR. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.